Hello and welcome to another session of the My Solo 401k Financial, my community YouTube webinar series. We're about to get started. All right. So today's a great topic. We're here to talk about the Fidelity self-employed 401k plan versus our solo 401k plan provided by my solo 401k Financial to really highlight the differences in terms of the features, etc. So let's jump into the content. So the presentation is being provided for educational purposes only. It should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So if you are on YouTube, thank you so much for joining. Please feel free to like and subscribe for more videos like this. You can also post questions in the comments, and we'll go through those questions and comments after we go through these slides. We'd also encourage you to subscribe for access to these weekly webinars that we host at least once a week, sometimes a couple times a week. So here are some great examples of some of the other good content we've had on YouTube, such as what's the magic number of self-employment income I would need to be able to maximize contributions, how much income I need to maximize contribution. We've had some good content as far as Vanguard exiting the individual 401k business, and this would be super good timing for those individuals who have existing solo 401k plans at Vanguard, as they might be looking at transferring their plan over to Fidelity. So you can compare how that would work versus transferring, for example, over to our solo 401k plan if you don't want to stick with a census, which is who Vanguard sold their business to. So last week we hosted this type of webinar focusing on us versus the Schwab solo 401k. This is us versus Fidelity self-employed solo 401k. We also on the horizon are going to be going through payroll integrations with our plan, starting with Gusto. So let's talk about where we're headed. Am I eligible to open a solo 401k, right? Start with the basics. What are the benefits and features of our solo 401k plan? Let's go through the differences line by line of the different features of us versus Fidelity solo 401k. And what does that mean as far as some of the top use cases? And then, of course, we'll go through some resources. We'll touch on the tax credit, just a little shed more light on that, as it's always a hot topic. So as far as our community, we just want to highlight that we host daily office hour style Zoom calls on our community at 1 p.m. Pacific, 4 p.m. Eastern. It's always free to join. All are welcome. You can find us at mysolo401k.net/my community. It's not just those calls. We also have forums. We have a library of hundreds of videos and webinars. So it's a super educational platform for all those self-employed individuals out there. So starting with the basics in terms of who is eligible to set up a solo 401k plan. Well, it's for a self-employed person, an owner-only business. So it has to be a business with no full-time W-2 employees. Now, you need to be self-employed. So that means you're reporting earned self-employment income on your taxes. It could be on a Schedule C, for example, if your business is taxed as a sole proprietor, like a single member, disregarded entity. You cannot, again, have any non-owner, non-spouse, full-time W-2 employees working for your business. So you could have contractors, or you could have W-2 employees that just work, say, a few hundred hours a year and still be able to set up a solo 401k. You could even have a spouse or business partner that's working in the business, participate in the plan, and that would still be considered a solo 401k. Do I need a separate entity? No, you don't. So we have many individuals who don't have a formal legal entity, right? You might be operating as a sole proprietor, and that's fine. Ultimately, the key is that you're reporting earned self-employment income on your taxes, like on Schedule C or a W-2, for example, if your business is taxed as an S corporation with no employees working for you, of course, other than yourself or your spouse or a business partner. Now, there's no minimum amount of earned income that you would need to report in order to be eligible to set up a plan. But if your goal is to make contributions, you can't save more than you earn. So if you might only have a few $1,000s of self-employment income, which would make you eligible, but you're not going to be able to save more than a few $1,000s because you can't save more than you earn. Your spouse or business partner can participate as long as the spouse or business partner is also working in the business, reporting their own earned self-employment income. Now, a common scenario that'll come up is someone might have a W-2 day job and then also have separate self-employment income. And that's fine. The fact that they have a W-2 day job is not going to prevent them from setting up a solo 401k based on their self-employment activity. They could even be participating in their W-2 employer-sponsored 401k plan and still have a solo 401k. So why do folks want to open a solo 401k with us? Well, it comes down to the benefits, the features, the service, right? With our plan, you have maximum control, maximum options in terms of what type of contributions you want to make, right? Whether it's pre-tax, Roth, or mega backdoor Roth, what type of investments you want to make, whether it's traditional brokerage type investments or alternative investments like real estate, et cetera, or if you want to take a loan, and just having that expert full compliance support for the plan. So let's just go through those a little bit deeper. So by alternative investments, we really mean true alternative investments, right? This could be investing in a company, right? Like a private placement. It could be a pre-IPO company. It could be real estate. It could be lending money to someone like a promissory note. It could be precious metals like gold or silver. It could be cryptocurrency. And as part of the establishment process with us, we're helping our clients open up accounts where they have checkbook control. This could be a brokerage account like a Fidelity that will actually give a free checkbook, or it could be a bank account where you have access to certified bank checks, the ability to wire, the ability to ACH easily in and out of the account. Next, contributions. So our plan, of course, allows for pre-tax contributions, but also allows for Roth, whether it's employee or employer, and even voluntary after tax, which is how one makes mega backdoor Roth contributions. So with our plan, the individual is going to be able to contribute, for example, for 2024, up to $69,000 or even $76,500 if they're 50 or older. That's why the solo 401k plan has the highest contribution limits for any defined contribution plan available to self-employed individuals. Our plan supports participant loans. So this is where the individual can literally take the money out of their solo 401k, use it for any purpose whatsoever, and it's not going to be considered a taxable distribution as long as it's documented as a loan, which we handle that as part of our service for no additional charge, and then paid back according to the terms. It would have to be paid back in monthly or quarterly payments. It's up to you. Equal payments of principal and interest. The interest is going to be prime plus 1%, or it could be a CD rate plus 2%, with those payments spread over a 5-year term, or even longer if the proceeds are going to be used to purchase your primary residence, in which case it could extend as much as 30 years as far as the repayment term. Consolidate. So we have tremendous experience in helping clients transfer funds from hundreds of different institutions. And we tracked all that experience, that knowledge, to make it easy for new clients going forward or existing clients that now want to transfer money over. Because as you can imagine, all these different places will have their own unique process. So with our solo 401k plan, you could transfer funds from a former employer plan, could transfer funds from an IRA, as long as it's a traditional IRA, right? Under those Roth IRA rules, you can't transfer money from a Roth IRA to any type of 401k, including a solo 401k. So we mentioned alternative investments, with real estate being one of the top options. And some folks will want to invest in real estate on a leverage basis, right? Use financing. And that's fine. It has to be a special kind of financing called non-recourse financing, meaning the lender has no recourse against the solo 401k owner individually, right? They can't guarantee that loan. Really, the only recourse is the collateral, right? The real estate investment property. So it's possible to, again, use solo 401k funds along with debt financing, as long as it's non-recourse financing, to say invest in a rental real estate investment property. Now, if someone were to make that type of investment through an IRA, the IRA would be subject to a special kind of tax, right? The income that derives from that debt finance real estate investment that flows to the IRA would be subject to unrelated debt finance income tax payable by the IRA. But there is an exception to that UDFI tax, that unrelated debt finance income tax, with respect to debt finance real estate that's held in a 401k, specifically in our solo 401k. So for those individuals that are looking to make that type of investment, the solo 401k plan certainly presents a tremendous advantage over making the same type of investment through an IRA, bank or brokerage account. So with our plan, we're neutral as far as where the accounts are at. At the same time, we're very hands-on in helping clients open up accounts at the bank or brokerage of choice. We've helped our clients open up accounts at hundreds of different banks, many different brokerages, for example, Fidelity and Schwab, just to name a couple, where we pre-fill the paperwork that they require to open up the free accounts. Conversions. So our plan would allow someone to transfer money from a pre-tax status to a Roth status, right? So let's say you have traditional money in an IRA or in a former employer plan that we help you roll over to the pre-tax solo 401k sub account. So you may be coached up, like some clients are being advised by their CPA or their financial planner to say, you know what, your income is low, relatively low this year. So let's move money from your pre-tax account to your Roth account while you're in this relatively lower tax bracket. You'll have to pay taxes now, but the growth, once it's in that Roth account, is going to be potentially tax-free. So our plan allows for that type of strategy, right? Moreover, we handle the 1099-R reporting that goes along with it. Because when you move the money from the pre-tax account to the Roth account, that's not only taxable, it's also reportable. So we handle the 1099-R that's required as an optional free service. In other words, we don't charge for that. In addition, we mentioned Mega Backdoor Roth as one of the main reasons why so many clients are signing up with our plan. And that entails making a two-step process to make a Mega Backdoor Roth contribution. Step one is making the voluntary after-tax contribution, because you're taking advantage of the fact that the voluntary after-tax contribution limits are higher than the standard Roth limits. And then the second step is to move the money from the voluntary after-tax sub-account to either a Roth solo 401k or Roth IRA. So that subsequent transfer from the after-tax to the Roth is reportable. And again, we handle that 1099-R that would be required to report that after-tax to Roth transfer as an optional free service for our clients. We have an online forum where clients are providing us information about whether it's conversions or after-tax to Roth transfers to provide us the information so we can prepare the 1099-R. $1,500 solo 401k tax credit. And we'll talk a little bit more about it in detail as some bonus content at the end. But in short, our plan would make the self-employed person eligible to be able to claim $1,500 in tax credits. It's $500 per year for 3 consecutive years, which, as you might imagine, tremendously offsets the cost of setting up and maintaining the plan. And then, of course, going along with all that is just the support, right? Whether it's the compliance support, educational, we're on the phone every day and on emails. Again, we have the daily office hours just to be able to help our clients, achieve whatever their objective is. Okay, so now let's start to compare the Fidelity solo 401k versus the solo 401k plan that we offer. Let's look at some of the key features, right? Fidelity calls it their self-employed 401k. Okay, so let's start at the beginning, right, with the account opening process. So the way I think about it is that a 401k plan is really a legal entity, right? It's a trust that's being set up. The self-employed person is putting their assets into a trust for their future benefit when they're retired. So it's really a legal entity. So like any legal entity, it's the documents that create it. And there's a number of documents that are needed to establish the plan. So if someone goes to Fidelity, that individual would need to fill out all that adoption paperwork and other establishment documents that Fidelity provides. Whereas, of course, with us, we have a quick 1-minute application. It's just 10 simple questions to gather the information that's needed. And then we use our IRS approved documents to create the solo 401k plan for the individual's business. We prepare those documents same day, and then we guide them through the process to open up accounts at the bank or brokerage of choice, which leads us to the next feature that we want to highlight. So of course, with Fidelity, someone is opening up a plan, meaning Fidelity's documents, as well as an account at Fidelity. With our plan, you could still have your account at Fidelity. So Fidelity not only, of course, will open up accounts for their own plan, but also opens up brokerage accounts for third-party plans. And we pre-fill the paperwork that's required. It could be different sub-accounts. So even though Fidelity's plan, for example, doesn't allow for Roth, they'll still open up an account for a third-party plan like our plan that does allow for Roth and mega backdoor Roth. So you can have the plan with us, but still have your accounts, your investments at Fidelity. And again, Fidelity doesn't charge anything to open up these accounts for our plan, for our customers. There's no account opening fee, no maintenance fee. There's even free online trading. So the cost. So Fidelity doesn't charge anything to open up their self-employed 401k plan. We do have a fee, which is $650, which includes the $525 establishment fee, plus the first $125 annual fee. On the anniversary date, meaning 12 months later, for example, if someone were to sign up now, this time next year, that $125 fee that would be due next year would cover the following year, so the second year. And that's one plan, one fee, regardless of the number of sub-accounts. If you've got, say, a husband and wife, both participating in the same business, working in the same business, participating in the same plan, it's still just one plan, one fee. But as mentioned, our plan would make the self-employed individual eligible for $1,500 in solo 401k tax credits, which is going to more than cover the cost to set up and maintain the plan for the first 7 years. So the net cost is going to be zero over the first 7 years. Employee Roth contributions. So Fidelity's plan doesn't allow for any type of Roth contributions. It doesn't allow for employee. It doesn't allow for employer. It doesn't allow for mega backdoor Roth. It doesn't allow for in-plan Roth conversions, like we were talking about with the pre-tax to Roth conversion. Whereas our plan does, right? It allows for all of the above. And we have tremendous experience in helping clients, educating them on the rules, the process, the procedure, the compliance support, like the 1099-R that would be needed when you're making a voluntary after-tax transfer from the voluntary after-tax to the Roth, i.e. the mega backdoor Roth. So solo 401k participant loans, Fidelity's plan doesn't allow for it. Ours does, right? A lot of folks, they want to have access to that. It could be an emergency fund, right? Or it could be they just need money for some other, their own personal investment purpose. Who knows? The great news is you can use the money for any purpose whatsoever. The compliance support, right? This is what we do 24/7. We have deep, deep experience in it. And so, whereas of course, with Fidelity, you call in, you get someone who may or may not have experience. So that is very important for our clients to be able to get that expert educational support. Alternative investments, Fidelity is going to limit their solo 401k plans to just investing in Fidelity's offerings. Whereas we're neutral as far as what our clients are investing in, right? We don't make money on how much their account balance, right? It's a totally flat fee. Our plan allows for alternative investments. We have deep experience in educating our customers on the rules, right? Whether it's investing in real estate or syndicated transactions, cryptocurrency, precious metals, etc. Form 5500 EZ reporting. So once the value of the solo 401k plan, right, including all the different sub-accounts, all the different investments, etc., exceeds $250,000, there's going to be an informational filing requirement. The name of that filing is a form is called a Form 5500 EZ. So we handle that as an optional free service for our clients. In other words, we don't charge for it. They just have to let us know that the value has gone up above 250 to put their plan in the queue for us to be able to prepare that 5500 EZ. And we do it under the electronic filing system to make it easy for all parties. Whereas Fidelity, they don't handle the 5500 EZ, right? They may put some disclaimers in some notice. Based on experience, we have people that upgrade from Fidelity every single day. And sometimes we find that they were not even aware of this 5500 EZ requirement. But Fidelity is certainly not going to prepare that 5500 EZ, etc. 1099-R. Now, Fidelity does, based on experience and feedback, does handle the 1099-R to the extent that it's needed, right? Of course, in their situation, they've really limited the situations where the 1099-R would come up, right? Since they're not allowing for the in-plan conversions, they're not allowing for the mega backdoor Roth. Whereas we handle the 1099-R in all scenarios where it's needed, right? Clients, again, just have to let us know. We don't have access to the account, so we don't necessarily know if someone took a distribution, for example, and they need a 1099-R. But we have an easy online form where clients can let us know 24/7, give us that information so it gets in the queue for we can prepare that 1099-R, which again, we handle as an optional free service for our clients. In other words, no additional charge. Opening accounts, right? Fidelity is only going to allow you to have your accounts at Fidelity, whereas we are neutral. You could have your accounts at Fidelity, or you could have them somewhere else, or you could have them at Fidelity plus somewhere else, right? You might have an account at a cryptocurrency exchange or a bank, and we're very hands-on in helping our clients open up those accounts at the different institutions. And then, of course, the $1,500 solo 401k tax credit, where all of our plans now, right? New plans could be someone restating from an account of solo 401k at Fidelity to our plan, to upgrade to our plan. It's going to be eligible. It's going to make the individual eligible for the $1,500 solo 401k tax credit, which is tremendous in offsetting the cost to set up and maintain the plan. So that once we have this foundation of knowledge, okay, what are some use cases that we see, right? So the frugal investor, because again, the $1,500 solo 401k tax credit is going to more than offset the cost to set up and maintain a plan with us for the first 7 years. So your net cost is going to be zero. You do not have to use retirement money to pay our fees either. So it's not going to be, our fees are not going to deplete your retirement account balance. You can use non-retirement money to pay our fees. The Roth maximizer. Fidelity's plan doesn't allow for Roth whatsoever. Our plan allows for all types of Roth conversions, all types of Roth contributions plus Roth conversions. So all types of Roth contributions would be employee, employer, voluntary after tax, which is how one makes mega backdoor Roth. Conversions would be moving money that's in a pre-tax status already in your plan to a Roth status, or moving money from the after-tax account to the Roth, which is how you make mega backdoor Roth contributions. The large account holder. So once that value exceeds $250,000, that's going to trigger the 5500EZ filing requirement, which we handle for our clients, and we do it under the electronic filing system just to make it super easy to get it done. The alternative investor, so those that may want to diversify. Some folks may want to have some of their money invested in a brokerage account at Fidelity, but also have other funds in different types of investments, right? Whether it's real estate, private placements, private stock, etc. So you could transfer the funds out of the brokerage account at Fidelity that's governed by our plan to make that investment, or you might have a bank account just to make it easier to make those alternative investments. And you could have both the bank account for the solo 401k plus the brokerage account at Fidelity. The rainy day investor. So this is the individual that wants to preserve the ability to take a 401k loan, right? Our plan allows for that. We prepare the required loan documents. You can borrow up to 50% of the balance, not to exceed $50,000, and that's per participant. So if you have husband and wife that are both working in the business, both reporting their own self-employment income, they both have $100,000 or more in their respective solo 401k sub-accounts, each person could borrow $50,000. So our plan, as mentioned, makes the self-employed individual eligible to claim $1,500 in solo 401k tax credits. So these credits were authorized under the Secure Act. There was a number of tax credits that were authorized to encourage small businesses to set up 401k plans, right? We worked for almost a year with different stakeholders like the IRS, other industry stakeholders, just to streamline this process. The IRS updated the form that's used to claim the credit in December of 2023, which coincided with when we launched it for our new plans going forward. So all new plans going forward, as well as individuals that have an existing plan, right? You could have an existing plan at Vanguard, you upgrade to our plan. Now you're going to be eligible to claim the $1,500 in tax credits. So it's $500 per year for 3 consecutive years. So if someone signs up here in 2024, right, they're going to be eligible to claim a $500 tax credit starting when they file their 2024 taxes, and then again for 2 more years. That could be for a new plan or an existing plan, right? If you're upgrading the, say, basic plan at Fidelity to our plan to be able to take advantage of the mega backdoor Roth, to use a simple example. So this credit is not a function of the cost. So even though the credit is more than our costs, the individual would still be able to claim the full $500 tax credit. So in the first year, our fee is $650. which includes the $525 establishment fee, plus the first $125 annual fee. So your net cost is $150. In the second year, our fee is $125, but the individual would still be able to claim the full $500 tax credit. Likewise, in the third year, this is a tax credit, not a tax deduction. With a tax deduction, you're reducing your taxable income, then calculating your tax liability. With a tax credit, it's preferable because you first determine your tax liability, then you reduce that liability dollar for dollar. So again, in order to be eligible for the credit, you have to be self-employed, no employees working for any business owned by you or a spouse, if any, so that you're eligible to set up a solo 401k plan generally. And then the individual sets up a plan like ours that includes the auto contribution feature. So what is the auto contribution feature? It sets a default 3% contribution percentage. But the individual, the self-employed person, the solo 401k owner, has to be given the option to opt out, right? That's what the feature requires. So the self-employed individual could opt out of the default 3% contribution amount. It doesn't mean they can't contribute, right? They could still contribute more. They could contribute less. They could contribute in whatever schedule or interval they prefer. In other words, they're not even required to make annual solo 401k contributions to qualify for the credit. If you have an existing solo 401k plan, the feature can be added as part of restating to our plan to make the individual eligible for the credit. You claim the credit by filing Form 8881. That's the form that was updated in December, as I mentioned. So we have a deep dive walkthroughs, right, for all the different scenarios, right, to be able to how to fill out the credit, how to fill out the form to make, to claim the credit, not only the Form 8881, but the related forms, right? So there's a walkthrough geared towards a business tax as an S corporation, a walkthrough geared towards a business tax as a sole proprietorship, et cetera. And we make that deep dive walkthrough, that video webinar, available to all of our customers whose plan includes the auto contribution feature so that they're eligible and they know exactly how to claim the tax credit. So just a couple quick examples. Lindsay's self-employed. She has a solo 401k plan. She amends her plan here in 2024. So now she'll be eligible to claim the $500 tax credit when she files her 2024 taxes next year. And then again for 2 more years, as long as she maintains the plan with the auto contribution feature. Brad doesn't have a solo 401k, but he's self-employed, no employees. He's a solo attorney, so he's eligible to set up a plan. So if he signs up here in 2024, he's going to be able to claim the $500 credit when he files his 2024 taxes, and then 2 more years after that, as long as he maintains that plan with the auto contribution feature. All right, so let's go to the questions. Thank you so much for participating and joining. I requested a change from G number to SSN for trading purposes, and Fidelity asked I log in with a different name, and they provided last 4 digits of G number and opening new logins. What's the tax implication if I'm not using EIN number for my trust or SSN in trading? So that would just be an internal number that Fidelity has assigned. Of course, when the application was completed to open the account or accounts at Fidelity, we would have listed the EIN number that we would have obtained as part of the establishment process specifically for the plan. So ultimately, any tax reporting that Fidelity ends up doing is going to be done under the EIN number of the plan. So that's not unusual that Fidelity is assigned this G number, in short. And when we obtain that EIN number for the plan, right, we're letting the IRS know that this EIN is relates to a 401k. So Fidelity is not going to be doing any plan tax reporting like the 1099-R, the 5500EZ for these brokerage accounts that are open for third-party plans like our plans. They may do other types of tax reporting like a 1099 DIV, but they would do it under the EIN for the plan, since that was what was used to open the account, so that therefore, even if they were to issue a 1099 DIV, the IRS would understand that this income is growing on a tax deferred basis inside of a 401k, because they know that that EIN pertains to a 401k plan. Hopefully that makes sense. Thank you so much for the good question. And thank you so much for the good participation. We do definitely appreciate it. Please continue to participate. You can follow us again on our community every single day. We're always there. mysolo401k.net/my community. 1 p.m. Pacific, 4 p.m. Eastern. You can post in the forums there 24/7. So there's lots of great ways to engage and to learn. We appreciate all the participation today. We'll give it another minute, see if there's any more questions. Looks like that might take us to the end. Well, thank you so much, everyone. All the best. Take care.